would take advantage of the fact that cryptocurrency is beginning to turn red on shorter timescales. We may see a more significant decline in Bitcoin. In this video, I'll explain it. I've been discussing it for the past week or so. However, there aren't any very noteworthy drops overall, and Amora. Some old coins like CFX are plummeting a little more forcefully than others, but that's because it ran at 100% or more in a single day. Overall, though, we continue to see some lovely green every day. Ondo, for instance, is still up roughly 3.7%. We have 6.4% ENS and 3.5% Litecoin. Litecoin. The market isn't doing too badly overall, but several meme currencies are also up significantly. Bitcoin is still trading at about $120,000. Ethereum is currently trading at about $3,700. XRP did close the day nicely and strongly. We will discuss that. However, the market is still doing rather well overall. The majority of these older coins are merely circling their higher time frame resistance, which is why I stated that although we may experience a slight increase in the amount of pullbacks we see in the future, they will all be brief. They will all be. And I want everyone to understand that. However, if we look at the cryptocurrency market capitalization, we're still in the neighborhood of $4 trillion. The fact that there are still more than 50 old coins in circulation indicates that they are beginning to gather traction in opposition to Bitcoin. Greed and fear, sitting at about 70. The dominance of Bitcoin remains at almost 60%, or nearly 61%. And this is at a moment when we are beginning to notice that old coins are actually waking up in a huge way. However, I continue to believe that we must keep our eyes on the larger picture, which is obviously Ethereum.
Yeah.
Believe Ethereum should be the main focus.
Here.
Ethereum's strength is very important. It's very important. Madagascar. And I actually discussed this a lot in a recent live stream because I was examining the trade volume on the 7-day and 30-day periods, because if we look at this, let me move this up here quickly. Ethereum is approaching Bitcoin. If we examine the trading volume on the 7-day and 30-day periods, it's about half. Really. The market capitalization of Ethereum, which is much smaller than that of Bitcoin, but the trading volume is about equal to it, indicating that there is a high level of demand for Ethereum at the moment, sir. Because this will indicate when phase 2 is about to really take off, we must pay close attention to it and be cognizant of it. Because of how much Ethereum has outperformed Bitcoin over the past 7 days and how much attention Ethereum has received from the mainstream media, I continue to think that we are essentially in the early stages of that second phase. So now, because we witnessed the M2 supply release, today was also a significant day. We now know that the 29th and 30th are the dates of the upcoming FOMC meeting. Therefore, since volatility will start next week, we must undoubtedly get ready for this. Thus, we will witness some significant upswings and even downswings. However, I don't have high expectations for this meeting overall, unless there is some weird news that we receive a rate drop. This is because rate cuts are currently just 5% likely to occur in July. In my opinion, September is the most important month to truly concentrate on when making judgments on rate cuts. Overall, though, we still need to get ready for the day of the FOMC meeting, because volatility will be present both before and after. But the primary focus of my discussion with the Fed was the M2 release, which we received today, July 22nd, and we could see that this increased not by a significant amount, but we did see another release where we saw an upward push on the M2 supply, the M2 supply, indicating that liquidity has been increasing steadily since January. As you are aware, a significant quantity of money has already been released. We have more than $500 billion, meaning that they have already printed $500 billion this year. And the M2 supply looks like this. For the months of May and June, we were using this game as our first example. Additionally, we were at roughly 21.94 trillion. This represented a 390.14 billion upside. And if we go to where we are right now, we've released almost $470 billion this year. Therefore, this is improving market liquidity, which is why we are beginning to witness a significant swing in traditional markets, including cryptocurrency. And speaking more specifically about traditional markets, the S&P is continuing to reach new all-time highs. the everyday appears like this. On Monday, we just reached a new all-time high. We're just kind of joking around right now, nothing too crazy. Until we see an urge and move, the price action is really dull. You know, those impulsive actions typically take place over a week. For instance, this is a fantastic push in September. And here's October. November, on the other hand, was a significant improvement. We want to see precisely that over here. The price movement has been somewhat dull, so we want to see a big impulse and move here. Generally speaking, I continue to think that 6,960 is our upside target. Football. Naturally, liquidity has also been enabling these markets to go higher. Additionally, I made this statement back in June. Everyone is rejoicing, I continued, as the Fed quietly injects liquidity. And this is the reason behind that. The discount window, regular asset purchases, and even overnight repo are the three ways the Fed currently supplies liquidity to Wall Street. Here, we can observe that each and every one of them is rising noticeably, particularly during the May-June period. In light of this, we should consider the position of Bitcoin in May, even if Bitcoin is used again. Back here, everyone was actually a little anxious or worried about Bitcoin. However, if we look at April and May together, we pumped a lot. In fact, everyone was curious as to why we achieved a new all-time high in May. Now consider when the market first experienced this liquidity. The beginning of this occurred in May. In fact, some of this began in April. In addition, there was a significant increase from March to April and subsequently from April to May when considering the M2 supply. Although April and May weren't particularly wild, we did saw the market's liquidity impact. Naturally, stocks likewise experienced a significant increase from the end of April to the beginning of May. Naturally, we went completely insane in the middle of May. We increased from about $5,600 and $5,700 to about $6,000. That's because the Fed began injecting cash, and it continues to do so today. At the same time, retail is beginning to make a comeback. Here, we're bullish. Old currency Google searches recently reached their greatest level since 2021. Indeed, we are currently witnessing a surge in Google searches, indicating that retail is beginning to recover. Retail is beginning to look. They are beginning to investigate ancient coinage. They are beginning to investigate cryptocurrency. They want to know what is going to happen next, what they can buy, and what they should buy. Okay, so this is where we start to become a little more cautious. We don't want to round trip everything. Isn't that what I mean? It's okay to withdraw our initial investment and keep some of the gains. In any case, we should always cling onto our assets because we are about to enter an era of inflation. We will never be able to escape inflation. However, it's always a big step to pay ourselves, ensure that we can pay off debt, and other things like that. Therefore, you should obviously exercise caution when retail begins to re-enter the market in this manner. However, all of this is taking place at a time when the current state of affairs is as follows. For the first time in its history, Bitcoin is trading above $120,000. Prices for gold are rising beyond $3,400 an ounce and are only 3% off a record high. It is anticipated that Ethereum will surpass $4,000 for the first time since December 2024. For the first time in its history, Ripple, also known as XRP, is trading above $3.50. Despite Trump's demand for a 300 basis point rate cut, the yield on the 10-year note is expected to rise beyond 4.5%. The price of silver is currently at its highest point since 2011. The challenge of deficit spending is far more serious than you may imagine. Naturally, when we consider this, everything is positive for cryptocurrency. Even the situation surrounding the deficit expenditure is positive for assets and cryptocurrency, because when we consider the true nature of this situation. In the future, assets like equities, gold, silver, and cryptocurrency will all continue to rise sharply. Technically, gold and silver are the greatest assets to store in times like this, but cryptocurrency is also a fantastic combination. You'll be safe if you diversify your possessions beyond cryptocurrency. Additionally, I've always predicted that silver